Google unveils audio smart glasses for fall launch. Multiple brand partners let Google spread manufacturing risk across different factories instead of betting on one supply chain. Samsung's role points to faster iteration on battery life, yet that could create compatibility headaches for iOS users by Q2 next year. Retailers carrying Warby Parker frames will now compete directly with Gentle Monster outlets on features, not just style. This forces Meta to either match the multi-brand strategy or accept share loss in the premium audio segment by holiday season. Cerebras stages record $5.6 billion IPO debut. Early trading gains tell little about whether production volumes can scale to meet the backlog. Enterprise buyers locked into NVIDIA stacks now have a credible second source, which could force price concessions on inference hardware contracts by early next year. Smaller chip designers will likely see funding rounds stall once investors compare burn rates against this new war chest. The pressure now shifts to TSMC, where Cerebras can outbid rivals for wafer supply through 2025. Meta cuts 8,000 jobs in May 20th restructuring. The reassignments of another 7,000 staff suggest the cuts target specific layers rather than blanket reductions across the board. Teams working on non-core hardware projects now face tighter budgets, which could delay next year's device prototypes by 6 months or more. This hands Google an opening to poach mid-level AR talent before those employees vest remaining equity packages. Expect open-source contributions from departing engineers to rise sharply once their non-competes expire in the coming quarters. Gatsby delivers first U.S. humanoid robot cleaning. Dispatching the first unit in San Francisco tests whether consumers will trust a full-size humanoid inside their apartments without any human supervision at all. Traditional vacuum makers like iRobot must now decide whether to license mobility software or risk losing the high-margin service layer entirely to new entrants. Early feedback suggests the robot handles stairs better than expected, which could expand the addressable market beyond single-level homes by the middle of next year if reliability holds during daily use. What scanner flags those patterns before they erode full-price margins? Early tests show recovery climbing once sellers auto-block repeat leakers. The tool pays for itself after reclaiming 10% of leaked redemptions in the first month. Watch Shopify's affiliate program. It will need new verification layers or lose mid-tier merchants who can no longer afford broad promos. March Industries spends $50 million on defense tech. Defense primes have long controlled the sensor-to-decision pipeline through closed stacks. Mark's hardware push targets the gaps where those stacks delay field updates by months. The first systems focus on modular power that slots into existing vehicles without full recertification. Budget officers flag integration time as the top overrun driver. That forces Lockheed and Raytheon to publish interface specs sooner or lose budget lines to faster teams that ship firmware updates without new vehicle qualifications. Stilter raises $10.5 million seed for patent tool. Patent databases already hold every record, yet counsel still miss overlaps because filings live in separate business units. Stilter's engine surfaces those connections by scanning internal project docs against the full corpus. The seed round adds litigation outcome signals by next year. In-house teams renew only the tools they open daily. Clarivate will have to bundle similar internal connectors into its platform or watch enterprise renewals move to lighter tools that counsel actually open every week. Nectar Social raises $30 million Series A. Most marketing suites already promise unified customer views, but the data still fragments the moment campaigns leave owned channels. Nectar focuses on stitching paid and organic signals inside the workflow sales already checks. The Series A funds deeper CRM hooks. Adoption hinges on whether the new hooks reduce time to report by at least half. Salesforce will need to open its journey event streams or risk losing teams that want one less dashboard to review before every launch. Status AI raises $17 million for social entertainment. Feeds already reward passive scrolling, so adding live layers risks losing the sessions that ad models depend on. Status bets users will stay longer when they can steer group outcomes in real time. The round backs faster rendering for those group sessions. Early data shows time spent jumps only when latency stays under 2 seconds. TikTok has to match that depth or watch its heaviest users drift to apps where passive watching stops being enough. Discord rolls out encrypted voice and video calls. Zoom must now decide whether to roll out matching encryption on its free tier before users start comparing call logs. The real pressure lands on analytics partners who lose visibility into usage graphs they sold to advertisers last year. Smaller platforms face an immediate choice to add similar features or reposition as the lightweight option that never claims privacy at all. Any delay beyond Q3 hands Discord a durable edge in the consumer segment that later-stage investors will price in. Medical equipment factory expands with lathes. Contract manufacturers serving the same device makers now face a choice between matching the throughput or ceding volume on elective surgery kits. The expansion quietly signals that precision metalwork remains the bottleneck, even as component shortages ease elsewhere in the supply chain. Smaller fabricators will have to accelerate their own capex plans or accept thinner margins on subcontracts that used to flow their way automatically. Expect regional players to announce matching machine orders before year-end to defend accounts. African startups see Q1 2026 funding rebound. Total dollars up does not mean more founders get funded at the starting line. The rebound concentrates in growth rounds that leave seed programs competing for the same small pool of local angels. By next year, accelerators will either merge or start charging for demo day slots as their own runway tightens. The pattern repeats what happened in Southeast Asia 2 years ago, when headline growth masked a hollowed-out entry level. MENA startups raise $563 million in January rebound. 4 out of every 5 new dollars this month stayed inside the UAE, narrowing options for founders elsewhere in the region. VCs in Egypt and Saudi Arabia now have to either raise their own local sovereign funds or accept longer cycles between checks. The concentration also raises the odds that future policy changes in Dubai will ripple across the entire ecosystem faster than anyone modeled. That dependency will show up first in term sheet aggressiveness out of the smaller hubs. Virginia Venture Partners opens tech grants. Pre-seed founders on the East Coast just gained a 6-month runway that does not require giving up board seats. West Coast programs will have to either loosen their own terms or watch regional talent stay local through the first product cycle. The May deadline also compresses how quickly out-of-state investors can diligence before the next cohort fills. Expect copycat grant cycles from 2 neighboring states before the summer travel season begins. That will fragment the early-stage calendar for everyone involved. Missouri are lining up materials now because the July window closes fast for anyone still iterating on product. The real test comes 18 months later when the first companies return for larger rounds. Extra state filings add weeks to diligence that a pure angel check would skip. Several will accept a down round rather than carry the reporting burden into their Series A. That choice shows up first in their next product launch timeline. Moonrider advances e-tractor innovations. Field tests already show software updates cutting recharge time by 9 minutes per cycle. The first commercial deliveries will generate usage data that no diesel model can match. By Q4 next year, that data will push dealers to demand electric inventory or risk losing farmers who track fuel costs daily. Legacy manufacturers must now decide whether to license the same battery management stack or build their own from scratch. The choice will surface in dealer contracts signed before harvest season. Critical mass program opens for tech startups. Hardware teams have 6 weeks to file before the first review round locks. The $1 million grant changes which university labs attract talent next semester. Professors will steer graduate projects toward companies that can commercialize sensors or materials instead of pure research papers. That shift shows up in patent filings 2 years from now. The effect appears first in how many sensor startups stay in Boston. IDA Fund Program sets 2026 deadlines. The $250,000 checks reward teams that still treat IP as a defensive asset rather than a licensing line. 18 months from first wire, any developed code carries an exclusivity clause that blocks outside investors from touching the underlying models. 2 current applicants already rewrote their term sheets to isolate state-funded work from the rest of the stack before submitting. Leaked codes hit online sellers millions. Merchants lose roughly 4% of intended margin every time a code leaks to a coupon site. Vipa's monitoring layer now feeds directly into repricing engines that adjust offers in real time. Shopify must either embed similar detection in its next merchant dashboard or watch high-volume sellers migrate to platforms that already protect posted discounts from scraping bots.